Hello, this is James Smith at Gann Analysis LLC. You can find my website at gannanalysis.net. Today I want to talk about silver, the July contract. We're using the Gann style continuation series. SI stands for silver, Gann, N for the July contract. We're connecting the July contract, the current July contract, to expired July contracts. So if this looks a little bit different in terms of the history, is because we're not, doing the spot connecting to the prior spot. We're connecting only to July contracts. So what I want to show you today is something called price divisions. You're probably aware that you can take the retracement of any swing from this low to this high and look at 1/8 increments or 1/3 increments, whatever. But you can also do something interesting here. You can divide from the high to 0. So you're taking price divisions from the high. And in this case, I've used the Fibonacci 38.2% retracement, 50%, and a Fibonacci 61.8, and a 75%. Now 75% is from Gann. This is Fibonacci, and both Gann and Fibonacci share the 50% mark. So what I'd like to say here is that if you do this on any stock, any commodity, whatever you're looking at, you'll find that the divisions do catch certain highs and lows. In this one, you can see there was a low here, and you can see a low here, a high here, gave some resistance here, and this one caught the low pretty close. So if we get back to 1871 on the July contract, you can see rough resistance in here. It tries to get above it. It momentarily got above it, but if you could close a month above that, I think you'd probably be on your way to 24.49, which is the 50% retracement of high. So 50% retracement in this case, obviously 48.97 divided by 2 gives you 24.49. So it's pretty simple, straightforward, but it's a powerful concept. The 50% retracement is the most important retracement. And if you could get above this area of resistance, I think you're going back here. How soon will that happen? Well, that's where we start using Gann cycles, and that's a subject for a different video. But in this case, I just want to point out that this retracement, or this, 61.8% retracement of the high seems to be giving you resistance. We need to get above that. Then you can get more excited about silver. Now, it may seem like it's miles away. We're at 1570 as of yesterday's close. But keep in mind that you're probably quite aware that, central banks and governments are supplying unprecedented amounts of stimulus, both monetary and fiscal. Sooner or later, that's going to hit the commodities in a big way. Ironically, I believe that, when you finally see a recovery, that's when you're going to get inflation. So it's a bit like the Keynesian idea, pushing on a string. If you supply all the liquidity in the world and no one wants to take it up, nobody wants to borrow money because they're too worried about the future, it's not going to have any effect. But as soon as the global economy starts to recover in a big way, you're going to see inflation like you've never seen before. I'm saying it's probably going to be worse than the 1970s. So in that scenario, both gold and silver should do quite well. And I personally believe that silver will outperform gold. And the simple reason is, if you look back through history, every time there's been a bull market in precious metals, silver has always outperformed. So just keep an eye on this level, 1871. If you see silver get above it, on the July contract, you'll know that something big is happening. So hope this has been helpful. Thanks a lot for your time. Good luck in your trading.